Imagine waking up tomorrow and discovering that the world's most powerful governments have quietly spent hundreds of billions of dollars stockpiling one specific asset. While global attention remains fixed on the volatility of tech stocks, oil, and cryptocurrency, central banks have turned their focus toward physical gold. For over half a century, the US dollar has dominated global trade. Countries stored their wealth in dollars, businesses traded in them, and oil was priced in them. For years, many believed gold had become a relic of a previous era. It doesn't generate income, pays no interest, and produces no cash flow. Yet today, institutions tasked with thinking decades ahead are buying more of it than they have in a generation. This coordinated shift challenges the basic assumptions of modern finance. Data from the last 10 years reveals that central banks around the world are increasing their gold reserves at an accelerating rate. China has been consistently adding massive volumes to its gold reserves, and India is making similar large-scale purchases. This accumulation spans beyond Asia. European nations are actively participating, with countries like Poland and Turkey steadily increasing their own holdings. Individual investors often trade to maximize short-term profits. Central banks operate under a different mandate. Their primary job is to protect national financial stability over the long term. This coordinated behavior across vastly different nations is a signal that the world's most powerful entities are bracing for a major geopolitical realignment. We operate in an increasingly digital financial system. Banking is handled by algorithms, assets are recorded on digital ledgers, and artificial intelligence manages trading floors. Yet despite all this technology, physical gold remains one of the most trusted reserve assets on Earth. Digital systems inherently carry counterparty risk. They depend on continuous electricity, functioning servers, and the software and promises of third-party organizations. Gold neutralizes those vulnerabilities. Its value relies on absolute physical scarcity, entirely disconnected from software updates or government decrees. In a hyper-connected network susceptible to grid failures and cyber threats, an inert metal with zero technological dependency provides a tangible fail-safe. The world economy looks very different than it did just 10 years ago. Trade disputes, expanding sanctions, and growing geopolitical tensions are increasing uncertainty across borders. The use of economic sanctions has demonstrated that relying heavily on another nation's currency can become a strategic liability during a conflict. Gold functions as a neutral economic shield. It allows a nation to maintain wealth that cannot be remotely frozen, restricted, or confiscated by a foreign power. Beyond foreign policy, there's an internal threat. This split-screen chart illustrates how fiat currency's purchasing power has declined during inflationary periods, while gold's value remained stable. During historical inflation spikes, governments consistently turned to gold to preserve purchasing power. By acquiring gold, governments are securing an asset that provides defense against both aggressive foreign policy actions and domestic currency devaluation. This recent accumulation raises an obvious question. Are these massive purchases a sign that the US dollar is about to be replaced? The reality is much more complicated. The US dollar remains the world's primary reserve currency and continues to dominate international trade and finance. Instead of replacement, central banks are addressing concentration risk. This chart shows governments reducing reliance on a single asset by expanding gold holdings. Gold is simply held alongside government bonds and foreign currencies to create a balanced reserve. This subtle shift in allocation is a calculated, defensive strategy, providing a buffer against an increasingly unpredictable global market. We are witnessing a transition away from an era of seamless global cooperation and toward a period of deep financial fragmentation. Throughout history, countries with robust, diversified financial reserves have been better positioned to dictate their own terms during economic instability. The metal itself doesn't generate raw power, but it manufactures the most critical currency in any crisis: financial confidence. The sheer volume of these purchases points to a rapidly declining trust in modern fiat systems and the promises of allied nations. This accumulation signals that governments are actively building economic walls, ensuring they have the reserves necessary to rely entirely on themselves. Gold has survived every empire collapse, every financial crisis, and every major currency reform in recorded history. Today, the most sophisticated financial institutions on the planet are willing to sacrifice potential yields and interest just to hold this non-producing metal. These multi-billion-dollar purchases function as the ultimate sovereign insurance policy against an increasingly unpredictable world, which leaves us with one overarching question. If the most informed institutions on Earth are aggressively buying the ultimate financial insurance policy, what exact crisis are they preparing for?